make no friends in the pits and you take no prisoners. 1 minute you're up 500,000 in soybeans and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show.
All right, I am live here in Puerto Rico. It's a little after 9:20 now, Eastern time. This one is actually live. The last couple were pre-recorded. But we had a Category 5 hurricane that went by about 200 miles north, so it didn't really hit the island. But it was enough to cause some rain and a little wind. But the power goes out. I think we're on generators still right now. You blow on the power grid here a little too hard and pretty much goes down. But neither rain nor storm nor hurricane is going to stop this podcast from going on. And anyway, before I get into the disappointing economic data that came out this week, I want to go over again the disappointing economic data that I talked about last week, because all of this works together to form this stagflation narrative that I have been forecasting, and that the Fed and everybody else has been in denial, but that is the reality. So remember, last week we got the really bad jobs numbers. We got the July jobs number, which was way below estimates, but worse than that, they went back and they downwardly revised May and June significantly. Almost wiped out all of the job creation for those 2 months. It was the biggest back-to-back monthly downward revision in over 50 years. And I had been warning about it. It's not like I was surprised by the revisions. I expected them. They may have been even bigger than what I was anticipating, but I knew the initial numbers were no good. And when everybody was celebrating, I was saying, keep the champagne on ice. This is all premature, because I knew that the numbers would be downgraded in subsequent months, and that's exactly what happened. Now, after the bad news got out, Trump, of course, immediately shot the messenger, and he fired the head of the Bureau of Labor Statistics, claiming that the numbers were rigged, right? Not because of the revisions, because they got it wrong and now they had to fix it, because they've revised down every jobs report since Trump has been president. So every report that he took credit for as being a beat was, actually a miss. But he didn't can her for that. It was because he accused her of deliberately understating the job growth. The whole thing was rigged, just a smear to make him look bad. So he fired her. And I'm watching, some of these, talk shows over the course of the week, including today on Sunday. And you can see members of Trump's team are basically, going with this story that, the numbers are rigged, that the Trump economy is really great, but the government doesn't want the public to know how great it is. And so to discredit Trump and this great economy, they are, fraudulently reporting these bad numbers to try to make, this great economy look not so great, right? Now, the irony here, of course, is yes, the numbers are fake. They've been fake for a long time, including when Trump was president the first time. But they're not fake in the sense that the people at the Bureau of Labor Statistics are lying. They're not getting good numbers and then just, crossing those out and replacing them with bad numbers. And when Biden was president, they weren't crossing out the bad numbers and just slipping in some good ones, right? Because they really wanted to make Biden look good and they want to make Trump look bad. The fraud is the methodology to compute the numbers. That's what I've been talking about for years on this podcast, that you can't trust the data because the data was designed to be wrong, but it was actually designed to make bad economies look good. It was designed to benefit whichever party is in power. So regardless of whether you're a Democrat or Republican, the unemployment numbers are too low. The real rate of unemployment is much higher than what the government reports. That was true under Biden. That was true under Trump before. It was true under Obama. It was true under Bush. It was true under Clinton, right? They've been doing this for a long time. Same thing with inflation. The inflation numbers that the government reports by design are too low. Inflation is actually higher than what the government reports. The same thing with GDP. GDP is actually lower than what the government reports. It's lower now. It was lower under Biden, and et cetera, right? So now, though, Trump is claiming that the data is rigged in that it's not showing how great the economy is. The reality is, if the data wasn't rigged, we would see how much worse the economy actually is. That is the truth. But, Trump doesn't like the data because it's getting in the way of his phony narrative about a booming economy. According to Trump, we've got the hottest economy in the world. We've got the greatest economy in the history of the world. And so when data comes out that doesn't, support that, well, let's fire the person who's calculated the data. And in fact, I just found out that we're probably not going to even get a jobs report for August. So the first Monday, Friday in September, they're not going to come out with a report because now the excuse is, well, we want to make sure we get it right. I think the reason they don't want that report is because it would revise down the July number to a minus, and maybe the August number will be minus. So Trump does not want these bad job reports to be made public. So under the guise of we got to fix it, right, they're not going to let people see the data, right? Now, who knows? Maybe they'll do the same thing with the inflation data. Let's fire those people. Let's not even report this fake numbers until we can get it right. Or maybe the GDP, right? Because we don't really need these numbers. Let's just take Trump's word for it. Who needs government numbers? Trump is smarter than all these guys anyway. So if Trump says the economy is booming, why should we question him, right? I mean, he must be right. I mean, why would he lie, right? I mean, if he says it's a booming economy, he ought to know, right? He's running the whole thing. He's the greatest deal maker in the history of deals, and he's negotiated us to this massive economic boom, right? That is the pitch. But anyway, so who knows? But we got this weak jobs numbers, and I knew that the labor market was weak. I mean, it was weak under Biden, and it's weak under Trump. I mean, nothing's changed. It's the same labor market. It's just continuing to weaken. And the Fed was wrong when they claimed that the labor market was strong under Biden, and they're still wrong, making the same claims. For all the talk and all the Fed bashing, Powell continues to tell Congress how great the economy is. Powell isn't saying the economy stinks. He's saying it's great. He's saying the labor market is great. So he's, saying the Trump economy is good, right? He just doesn't want to cut rates because he's worried about inflation. And the data we got this week supports the fact that he should be worrying about inflation. In fact, the data that we got this week proves what I've been saying, that the Fed should be hiking, that the conversation should not be about when is the Fed going to cut, but when is the Fed going to hike, because rates are too low. That's why the inflation fire is coming roaring back. Now, before we got the really bad news on producer prices, we got news that the markets actually celebrated on consumer prices. We got the July CPI that came out earlier in the week. And the reason people celebrated is that it wasn't worse than expected, right? That's how low the bar is on inflation. So the consensus was an increase of 0.2, and the increase was 0.2. So not worse than expected. And the year over year increase, which people were worried was going to go up to 2.8, held steady at 2.7. And so that was considered, hey, this is great news. The Fed can cut. Well, why? 2.7, that's 0.7 above 2. The target is 2, not 2.7. When inflation was 1.5 and 1.6, they had rates at 0. They were doing QE because we were so far below 2. Well, at 2.7, I mean, we're more above 2 now than we were below 2 then. And at that point, it was an emergency. We needed QE. We needed 0% rates. Oh my God, we're 0.4 of a percentage point below our target. Well, we're 0.7 above it now. So why are they cutting? Why aren't they equally as vigilant? Oh, we better hike rates. Look, we're way above target, right? And look at the core. The core is even worse. The core rose 0.3, which was expected, but that was worse than the prior month, which was 0.2. So the core is going in the wrong direction. And the year-over-year core, which was expected to come in at 3%, came in at 3.1, which was hotter than the 2.9 from the prior month. So supposedly core CPI is even more important than headline, right? The Fed wants core CPI to be 2%. Well, now it's got a 3 handle on it. What does that mean? The Fed is too easy, right? But somehow the markets looked at this, and because it wasn't even worse, they concluded, aha, this proves that there's no inflation. This proves that the tariffs aren't, being passed on to consumers. So the Fed is all wrong. Powell's a complete idiot and a moron. He should be cutting rates, right? That was the conclusion. So the market celebrated, on that one. But the rug got pulled out from under that celebration when we got the PPI numbers, which were a shocker. They were even worse than what I was expecting. But anyway, so the number for July was supposed to come out at 0.2 on the month. And that would have been hotter than the 0% from the prior month. But instead of 0.2, it came out at 0.9. 0.9, almost 1%, half the whole 2% target in a single month. 0.9 blew away the range. The whole range of estimates was from 0.1 to 0.4. So it's more than double as high as the highest estimate on the street, 0.9. Right? Horrible number, worse than several years, and clearly going in the wrong direction. The year-over-year PPI rose from 2.3 last month to 3.3, a full percentage point higher, and way hotter than the 2.6% that had been expected. And you strip out food and energy, it's just as bad. 0.9, up 0.9, and year over year, get this, year over year, core producer prices up 3.7%. And even more important than the fact that they're up 3.7% is the fact that the prior month they were up 2.6. So not only are we up, but we're moving in the wrong direction. And so this would call for a hikes as far as I'm concerned. So the market got this, and bonds went down, stocks went down. Gold actually shrugged it off. Didn't have much of a move. And gold stocks, and I'll get into that later, gold stocks rallied on the day. I remember a few months ago, gold stocks would have got crushed on a day like this because, it means we're not going to get the rate cuts. We're going to get rate hikes, although nobody talks about the fact that we're going to get rate hikes. But the bottom line is everything that could go wrong is going wrong, right? It's the Murphy economy, right? It's not the booming economy. It's not the golden age. It's the Murphy law economy where everything that could go wrong is going wrong. We're getting weaker economic growth. We're getting a weaker jobs market, yet we're getting stronger inflation. That's going to get even stronger. And it's not just the tariffs. Yes, the tariffs are going to get factored in. I'm going to talk about that. But there's a lot of other reasons that inflation is going to manifest itself in significantly higher consumer prices. But producer prices are a leading indicator of consumer prices. And the same thing happened when we got that big breakout of inflation in 2021. And I talked about it when the Fed was saying nothing to worry about, it's transitory. It started in producer prices. They moved up first. Well, obviously, the producers get hit first with the increase in the prices because, they're buying all the material and paying all the wages and all that stuff. So they get hit first with the higher prices, and then they raise their prices to make up for it. And so the consumers are next. And so this is a leading indicator for a rising CPI. Now, what would a normal Fed do looking at these indicators? Raise rates. The rates are too low. Yet Powell can't even talk about that because he's being threatened to be fired, or he's being called a moron for not cutting rates. So they're not even going to consider raising rates, which is why this is bullish for gold and bearish for the dollar. Because if the Fed's not hiking rates when it should be, it means it's too easy. Rates are too low, and so inflation is going to get worse. That's bad for the dollar. That's bad for bonds. That's good for gold. We got a quick commercial break. We're coming right back, so stick around. As a business owner, I know the challenge of navigating unpredictable markets, interest rates, and inflation. That's why having the right tools are essential. NetSuite streamlines operations and scales with growth. Over 42,000 businesses have already future-proofed their businesses with NetSuite by Oracle, the #1 cloud ERP. NetSuite brings accounting, financial management, inventory, and HR into one fluid platform. With one unified business management suite, there's one source of truth, giving you the visibility and control you need to make quick decisions. With real-time insights and forecasting, you're peering into the future with actionable data. When you're closing the books in days, not weeks, you're spending less time looking backwards and more time on what's next. Whether your company is earning millions or even hundreds of millions, NetSuite helps you respond to immediate challenges and seize your biggest opportunities. NetSuite is the platform that I would choose, and you should too. Speaking of opportunity, download the CFO's Guide to AI and Machine Learning at netsuite.com/gold. The guide is free to you at netsuite.com/gold. That's netsuite.com/gold. All right, so we also got more anecdotal evidence that throws more cold water on the Trump narrative that we've got a booming economy. We got the budget deficit for the month of July, and it came out way higher than people thought. In fact, year over year, July 2025 is 20% higher than July 2024. So last year in July, Biden was president. This year, Trump is president. The Republicans blamed our economic problems and our inflation on the Biden deficits. And, yes, Biden was partially responsible. Biden was reckless and irresponsible and presided over big deficits and government spending, and all that was bad, right? Well, what Trump is doing is worse, because this July has a 20% larger budget deficit than last July. Now, according to Trump, last July, the Biden economy was the worst economy ever, right? Worst economy in the history of America a year ago. Yet in the greatest economy in the history of America, now the government is running a 20% larger deficit than it was then. How do you explain that, right? Riddle me that, Batman. How does that, work? And in fact, the budget deficit for July was the second worst July budget deficit in history. So it is a bigger deficit in July than every July that Biden was president, save 1 month, 2021. Now, why did we have such a big deficit in 2021 in July? Because of the COVID stimulus spending. That's why, right? Whatever that initial big bill maybe it was the Inflation Reduction Act, whatever the hell they did, but they justified all this government spending because, we still had COVID, we were still locked down or whatever. But that was going on. So in that context, we had a big deficit in July. But every other July where Biden was president, the deficits were lower than this July when Trump is president. Now, when you have a strong economy, what normally happens is the deficits go down. See, what happens in a strong economy? Businesses are doing better. They're expanding. They're hiring more people. And those people are paying more taxes. The businesses are making more profits. They're paying more taxes. And because more people are getting hired, fewer people are getting government benefits, right? So in a good economy, tax revenues should be going up. Government spending, maybe not as much. And so you should have smaller deficits. When you have bigger deficits is when you have a weaker economy. And I believe the economy today is actually weaker than it was under Biden. Not that Biden was a great president. He wasn't. And had Harris been elected, the economy today would be weaker than it was under Biden, because that's just the trajectory that we were on. The point is that Donald Trump hasn't altered that course. He may have even sped it up a bit, but he definitely has not altered it. And this is despite the fact that we had all this tariff revenue that was coming in. So we did get that, right? Importers paid a lot of tariffs. But despite all that tariff money that they didn't have under Biden, we still had the second biggest deficit in the history of July budget deficits. So the idea that we're going to be able to offset the deficits with tariffs is nonsense. And in fact, what may happen, and I mentioned this from the very beginning, there is no question that these tariffs are unconstitutional. Right? Now, not that tariffs themselves are unconstitutional. The Constitution authorizes tariffs. Right? What it doesn't authorize is taxes on imports. And Trump is actually doing that with these deals he's made with NVIDIA and AMD, where they're paying the government 50% of their export revenue to China on certain products. That is a de facto export tax. And not only does the federal government not have the authority to do that under Article 1, Section 8, but Article 1, Section 9 actually says that the federal government cannot tax exports from any state. There are very few things that the Constitution goes out of the way to prohibit the federal government from doing, because the way the Constitution is written, if the government can do something, it has to be authorized. So if it's not delegated, they can't do it. But when there are certain things that they really, really don't like exports, they actually prohibited it. The same thing with direct taxes. That's actually in there twice. In fact, it's the only thing that they repeat in the Constitution. No direct taxes without apportionment, right? That's how much they didn't like what we now have with the income tax. But it's clear export taxes are unconstitutional. But import taxes are fine so long as Congress enacts them. And because they are revenue raisers, they have to originate in the House of Representatives. So tariffs are fine if the House passes them, and then the Senate passes them, and then the president signs it, okay. But none of that happened. Donald Trump just imposed tariffs using executive orders. Now, to do that, he had to justify it. So he basically had two things. One of them was reciprocity, where Congress had delegated the president the authority to have reciprocal tariffs. Now, the general idea behind that was, hey, let's say Trump is negotiating a deal and one country says, hey, we'll cut our tariffs from 5% to 4%. Trump could say, okay, we'll do the same thing. We'll cut our tariffs from 5 to 4. They don't have to go back to Congress. Gives the president a little leeway to make small adjustments. I guess the same thing the other way. They make an increase, we can match it up to a degree. I think it was 50%. So if they went up, if we had tariffs of 10%, we could go up to 15 to reciprocate against another country that jacked up the tariffs on our stuff. That was the whole purpose. Well, Trump basically exploited the word reciprocal by imposing taxes unilaterally that had nothing to do with reciprocity, but he made up a bogus definition, right? He came up with some crazy formula and said, we're going to reciprocate based on this ridiculous formula. Well, that was just to get around the law. You can't do that, right? And the court is not going to let Trump get away with it because it's so obvious. There's a case now pending before the appellate court because the lower courts already saw through this nonsense and ruled that it wasn't constitutional. But the Trump administration got a stay pending appeal. But it's likely that the appellate court is going to side with the district court because it's clear these are not reciprocal tariffs. And also, Trump used another emergency power to say, hey, we're doing this because we have an emergency. Okay, well, what was the emergency? Well, one emergency, according to Trump, are the trade deficits themselves, that they're an emergency. Well, we've had trade deficits for over 50 years. How is that an emergency? We had trade deficits every year Trump was president the first time, right? Well, why was it an emergency back then? I mean, nothing that has been going on this long is an emergency. Are they bad? Yes. Are they the result of bad economic and bad monetary policy and bad fiscal policy? Yes. But you can't call it an emergency. It's a chronic problem that's been going on for decades, and these tariffs aren't going to solve it. Ironically, they'll probably make it worse, right? So it's BS. Now, the other emergency was fentanyl. And look, yeah, we have a problem with fentanyl, but the tariffs have nothing to do with it. Our trade deficit has nothing to do with our fentanyl problem. So again, it's a contrived fake emergency to try to get around the law. Well, the Supreme Court, it's not even up there, the appellate courts are probably not going to let Trump get away with it. So what's going to happen is if the appellate court strikes these tariffs down, all that tariff money has to be returned to the importers who paid it, right? Now, I suppose if you're an individual American and you brought something in on your own and you paid the tariff, well, you're owed a refund too. So that's going to be a nightmare. But that means the deficits are going to be even bigger when they have to give the money back. But of course, what this is doing is setting Trump up for yet another scapegoat. Because yes, he's going to blame Powell for the recession. He's going to blame Biden, right? It's this mess I inherited from Biden. But now he's going to say, oh, the courts ruined my great economy. They got rid of these great tariffs that were bringing in all this revenue. And now we have this recession. It's because of the courts, right? The courts ruined my great economy. Ironically, the courts are doing them a favor because the tariffs are bad economic policy. The tariffs are undermining the competitiveness of U.S. businesses. That is the problem. We're basically putting a Band-Aid on skin cancer, and we're thinking that we've cured it, right? Meanwhile, we're letting the cancer get worse because we're not going to the root cause of the problem. Trump is not going to the root cause of our problem. He is pursuing policies to make those problems worse. So we may not even have that tariff revenue. So the deficits are going to keep rising. And that is why inflation is going up, because the Fed ultimately is going to cut rates despite inflation getting worse because of the weakness in the labor market and the weakness in the economy. And I think the gold market and the dollar market already smell this. What happened this week? Dollar went down, bonds went down, and gold was down a little bit. Silver was up, right? Gold was down about 0.5% on the week, but silver was up about a third of a percent. Not a big move, but it didn't get killed. It went up. But what was more encouraging to me was the action in the mining stocks, because both the GDX and the GDXJ hit new 52-week highs this week. In fact, the GDXJ hit a new 52-week high on Friday. The GDX didn't do that, but the GDXJ now caught up. It was lagging, and now it's caught up. Both of those indexes are up 65% on the year, right? This is the best performing sector in the Trump economy, are gold and silver mining stocks. Now, you wouldn't know that if you just listened to like a CNBC or something. They barely talk about these stocks, right? They want to talk, let's talk about Bitcoin. Yeah, Bitcoin isn't up anywhere near this much. I mean, it's up maybe 23%. It's not even up as much as gold, but it's getting killed by gold mining stocks, silver mining stocks. Why not talk about those? But, what I was watching this week that was very encouraging is every time a gold stock got sold off on earnings, right, which they've been doing this for years now, whatever the earnings are, just sell, right? That's like the programs are there, the algorithms. Anytime a gold stock comes out with earnings, just sell it, right? Well, they still sold them, but they immediately were bought back, right? The rallies, big drops, 10% drops, come back, right? Maybe it takes a day or two, but the market brings it back because buyers are now waiting in the wings to scoop these stocks up, right? You have big money, sophisticated money. For years and years, Wall Street never had any confidence in the gold rally, continued to expect the price of gold to crash. And so they never bought these stocks because gold stocks, when you're buying gold stocks, you are buying the future earnings stream of these gold mining companies. And if you have no confidence in future earnings because you expect the gold price to crash in the future, well, you're not going to pay up for these stocks. But I think the investors are now starting to come to the conclusion that gold ain't going down. In fact, they're going to have to get used to the fact that it's going to keep going up. And that means these gold stocks and these silver stocks are screaming buys. And that's why the smart money is just finally moving into the market. This has got a long way to go. The public is still asleep. They're not buying these stocks. You know, my clients are, obviously, but most of the clients don't get my advice. They don't watch my podcast. They don't have accounts with me. They don't own my funds, and they're not in on this. But again, I continue to strongly recommend. I think the consolidation is coming near an end on this $3,400 gold. It's going to break out. I think we're headed towards 4,000, maybe by the end of the year. Silver, once it breaks through 40, it's been hanging out around 38, 37 and a half, 38 and a half. Once it got above 39, but once it clears out 40, it makes a beeline for $50. So you want to get your gold and silver. In fact, we got, our website. We totally revamped the Schiff Gold website for the online shopping experience. You got to try it out. It's very seamless. You can load up your shopping cart. Of course, we still got our specialists to give you the personal touch. If you just don't want to, buy interpersonally, on your computer screen, if you want somebody to, to hold your hand and take you through the process, we got the best hand holders out there, and they are not going to steer you in the wrong direction. I was watching this infomercial on Fox Business the other day, and this company is out there trying to get people to buy these little teeny bars of gold that are like a half a gram, but there's like $50 worth of gold there, and they're charging $80 for it. So you need gold to go to 550 to break even. Plus, you had to pay the shipping and handling. And then they were selling silver $half, Kennedy $half, but not the silver ones from pre-1964, but the normal ones that are made, of copper clad, whatever. They're not worth much more than the face value. And they're selling these things at at almost triple. So they're basically selling a 50 cents for $1.25. Right. But, people are dumb enough to buy this stuff because of the way that they market it. In fact, this company does sell legitimate products, too. I went to their website to see what they were selling, like a 1-ounce maple leaf for. And it was like $300 more than you could buy the exact same coin on Schiff Gold. So there's a lot of, ripoffs out there, unfortunately, in this space. That's why you want to stay with somebody that you trust. So you want to get on the Schiff Gold site and buy some gold and silver. But if you want to take some risks, the Euro Pacific Gold Fund, EPGIX, right? I keep, get that symbol wrong a lot, but that's the no-load version. But, our fund is actually only up about 60. Oh, no, wait a minute. I thought the GDX, I think we're up more than 65% on the year. Maybe it's 70%. Because I thought we were lagging because my fund's up about 63, 64. Maybe those numbers are wrong. Maybe it's 70% on the year on the GDX. I gotta double check, but this is live, so I can't do it. But in any event, it's either that or higher. But the reason that my fund is not over 70% is because we got a lot of the real small stocks in there that have weighed us down. But I think that weight is going to become the reason that I believe we're going to outperform significantly. Because I think when more money starts to come into this sector, right now they're focusing on the big names. That's what the big funds are buying because that's where the liquidity is. But at some point, these little ones are going to really start to move, especially when the big ones start buying them. I mean, that's what's going to happen because they've got so much cash now. They're making so much money. They need to expand their reserves. They need to get more gold. And, why spend money exploring for it when you just buy it, right? There's so much in these small exploration companies that have already been looking for gold. A lot of them have pretty good properties they're sitting on, pretty good projects. They just need the money to develop them. Well, these major companies have got nothing but money. They're money machines at this point. Wall Street is just barely starting to catch on. So you really want to load up. This is a great sign that we're seeing this kind of action. I haven't seen this kind of strength in gold stocks in many, many years. Gold stocks are going up on days when gold is down. They used to get killed every time gold went down. Now they're going up. and they go up on days now where gold goes sideways. So you want to get my gold fund, buy some physical gold, and even look at my dividend payers, my basic dividend payers stock fund. I think we're now up 36% on the year. I mean, that's a fantastic return in 1 year. We have utilities in there. We have just basic stocks that pay good dividends, and we're running circles around the S&P 500 or even NASDAQ by buying these stocks because the tide has turned. Money is being sucked out of the U.S. economy, as I've been forecasting. People around the world are bringing their money home because it's much better to invest locally in their own stocks that are much cheaper than our stocks and get out of the U.S. dollar, which is a big risk. Even my foreign bond fund is beating the S&P this year. It's up over 10% just buying foreign bonds. And foreigners, when they look at the S&P, they're looking at losses because the S&P is barely up enough to cover what they've lost being in the dollar. And the dollar's decline has really just gotten started. The dollar's got a long way to fall. And so it's going to be a headwind for U.S. stocks and a tailwind for foreign stocks for many, many, many years. So we're getting private money divesting itself of U.S. stocks, investing in foreign stocks. We've got central banks divesting of dollars and buying gold, and that's going to continue. So you've got to do the same thing with your portfolio. Well, everybody else is still, oblivious to what's going on, and they're investing, looking in the rearview mirror, and just trying to do what worked in the past. They have no idea what's going to be working in the future. But what we're doing is forward-looking, and we understand this because we've been waiting for it. We've been forecasting it. It's actually taken longer than I thought for this process to begin, but it's clear that it has, in fact, begun. Anyway, I want to talk now, in fact, the rest of the podcast, about what's been going on with my bank. Just in case, too, some of the people that haven't, that have accounts at there or had accounts there haven't noticed my emails. I've been sending out emails and posting stuff on the bank website. In fact, this has been my full-time job now, unfortunately, because there's no pay. In fact, I have to pay to do this job. But I am trying my best to clean up this mess that I did not create. I had nothing to do with creating this mess, but I'm the only one who's trying to clean it up. But anyway, so my bank, as everybody knows, was put into receivership over 3 years ago. 3 years and maybe 2 months now. June of 2022. Yeah, so exactly, it's almost August 30th, on the 30th. So almost 3 years and 2 months. Put in a receivership, right? Like it was bankrupt. Under the administration of a trustee, a receiver. Despite the fact that my bank had no debt, no past due bills, and didn't even make any loans. All it had on its balance sheet was cash. And it had a couple $1 million more than it owed depositors. In addition to that, the bank had gold, silver, and mutual funds that belonged to the customers. And so we had the exact amount of gold, silver, and mutual funds that the customers owned. So that was a wash. So totally solvent bank. Didn't need a receivership. Nobody needed to be protected. I could have unwound this whole bank in a couple of weeks, taken my money out, and that would have been it, right? Although there was no reason to even do this. It was all done as a publicity stunt for the J5. The IRS came in here, strong-armed the Puerto Rican commissioner to do all that. That's the basis of my civil rights lawsuit, and I don't even want to get into that, right? But anyway, so after 3 years, what I did is this company called Qenta that was going to buy the bank, and then they stopped that. So I ended up doing a deal with Qenta that I now extremely regret. But I did a deal where Qenta was going to assume the liabilities and take on the assets of the bank customers who wanted to go there, right? So everybody had a choice. Go to Qenta, that was called opting in, or if you don't want to go to Qenta, opt out. And if you opt out, we're just going to send you your cash. But if you don't want your cash, then stay with Qenta. Now, if we told the customers, if you own gold, if you own silver, if you own mutual funds, and you want to opt out, you've got to sell those assets so we can send you all the money. But if you want to keep your gold and silver or your funds, then you got to go with Qenta. because they're going to take over. We're going to send those assets to them, and they're going to set up accounts with you, onboard you. And now instead of having an account with the bank, you'll have this account with Qenta. And so instead of the bank having your gold, Qenta's going to have your gold. So that was the deal. And a lot of clients said, yeah, I'm going to do that. Now, like a month ago, whatever it was, after 3 years of nothing happening, I'm getting frustrated because I'm totally out of the process, right? It's the receiver and Qenta working together. I'm totally shut out of it by this point. I've been out of it for years. But I'm very frustrated because nobody's getting their money, right? Nobody's getting their money at Qenta. No one's getting their money at the bank, right? But meanwhile, within the first few months, the bank sent all the gold, all the silver, and the mutual funds to Qenta. So Qenta's been custodying these assets for 3 years, right? But not giving them back to the customers. Why? I don't know. But apparently they never got the approvals they claimed they needed. They were never able to onboard any of the customers. And they were just waiting, right? They were waiting for the regulators to give them the go-ahead, right? And so after 3 years of supposed frustration, Qenta emails the receiver and says, we're terminating this deal, right? We're canceling it. It's over, right? Now, what Qenta paid for the right to have custody of these assets and to assume these customer relationships was $1.25 million. That was all they paid. And it was the transaction, it was split into a down payment and then the final on closing. Of course, we never got a closing, so they never made the second payment. So they paid $500,000 when I signed the deal. And then they were supposed to pay another $750,000, but they canceled it before. And they said, okay, we're canceling it. We want our $500,000 back, which is in the contract. If the deal is terminated, they get their $500,000 back. But Qenta told the receiver, that's not all we want, right? They said, we had like 3 years of expenses trying to close this deal. We spent like $5 million. We want that. We want to get paid, even though the contract specifically says that each party pays its own expenses. So if Qenta spent $5 million, which I seriously doubt because they didn't provide any proof, they just said it, right? But even if they did, that's on them, right? Because if a contract says each party assumes its own costs in concluding the transaction, well, you can't. Now, if Qenta wants to say that the bank breached, then there is a clause that says if there are damages due to the other party's breach, you can recover, but you need to file an arbitration in New York City and you have to prove it, which Qenta did not do. But Qenta said, we claim $5 million. But the worst thing about that, Qenta said, okay, we're terminating this deal. And so we're going to give you back the assets, which of course they have to do, right? If they were going to buy the right to custody the assets for the customers, and they've never onboarded the customers, and now they terminate the contract, well, clearly they got to give back the assets that were only transferred to them because they were going to hold them for the customers. Well, they're not going to do that because they canceled the whole deal. So Qenta said, we're going to give you back these assets. And they listed the assets, and they said, precious metals, $25 million, right? And in the asterisk on the bottom, it says liquidation value as of September 30th, 2022. So in other words, Qenta didn't want to return the gold that we sent them. We sent them actual gold bars, right, for the customers, right? Qenta didn't want to return the gold bars. Qenta wanted to sell the gold bars now and give the bank back what they were worth 3 years ago when they got them. But the $25 million worth of gold that we sent them is worth $50 million today. Qenta wanted to keep $25 million of appreciation for itself on gold it never even owned. It never had title to. It always belonged to the bank and it belonged to the customers. So all told, Qenta listed $50 million of assets that it had, and it claimed that it wanted to give the bank $38 million, and they would call it even. But the $50 million of assets were actually worth closer to $80 million. Not just the gains on the gold, but the mutual funds. They wanted to return the mutual funds, not at their current value, right? They wanted to sell the mutual funds and give the customers what those funds were worth 3 years ago, not what they're worth today. And so I went livid when I saw this, and I immediately reached out to Qenta and said, look, this is bullshit. You terminate the deal, fine. You get your $500,000 back. That's it. you need to send all of these assets back to the bank as you receive them. All the gold, all the silver, all the funds, they all go back. They belong to the customers, and you can't take their appreciation. Well, unfortunately, I couldn't convince the receiver, right, to ask for the assets back. The receiver had a different idea. The receiver sent a letter to Qenta and said, look, you got those assets. Even though this thing hasn't closed, you got them. I don't want them back. You give them back to the customers. And you better not sell them because you don't own them. They're customer-owned assets. They belong to the customers. And so you need to contact those customers, wait for instructions, and do what the customers want. If the customers want to sell the gold, then sell it and send them the money. If they want to keep their gold, then you have to hold it for them because that's those are the terms by which you accepted them. They didn't buy all these assets for 500 grand, which is what they want back. They bought the right to custody those assets that were owned by the customers, right? Not Qenta. So the receiver says, turn them back. Now, I don't trust Qenta at this point based on what they tried to do. And I'm like, no, I'm not going to just leave these assets with Qenta based on what they just tried to do. So I go to court, right? I'm the guy who signed the contract, right? The purchaser, not the receiver. Even though we were in receivership, he let me negotiate it and sign it. So I send a demand and I say, send those assets back or I'm going to sue. They ignore my demand. I file a lawsuit or I have to go to arbitration because that's what the agreement calls for. But then I go for a TRO, a temporary restraining order, in aid of arbitration because I want to freeze those assets. I want to prevent Qenta from doing something with them while I'm trying to get them back to the receiver, right? So, and I actually won in the Supreme Court of New York because New York was where the jurisdiction was. I went in there and I got a TRO to freeze the assets, and the judge scheduled a hearing to show cause because I wanted to get the judge to order Qenta to return the assets to the bank. The bank is in administration under receivership. These assets belong to a bank in receivership. I mean, that's even a stronger claim, right? These assets need to go there, right? So I win, but Qenta makes an emergency appeal and says Schiff has no standing. Peter Schiff can't do this. He doesn't act for the bank. The bank is in receivership. The receiver needs to ask for the assets back, and he's not doing it. So I'm trying to get the receiver through another lawyer to help me by just joining the lawsuit with me. I told the guy, I will pay for it all. It's not even going to cost the bank anything, right? It's not coming out of the customers. I am financing this lawsuit. If you join me, then Qenta is going to have to send all the assets back to the bank. Yet he refused. The receiver's position was, I don't have to do anything because I don't have them anymore. Qenta's got them. It's Qenta's responsibility. Qenta needs to send them back to the bank. Now, I don't trust Qenta, right? I mean, I don't think this receiver is all that competent, but I don't think, he's going to try to screw over deliberately and take their money, right? So I'd rather have the assets with the receiver at this point. I mean, he's the lesser of the two evils between Qenta and the receiver, right? Because at least the receiver has a fiduciary responsibility to maximize the assets for the customers. Qenta, as far as I'm concerned, they're trying to maximize the value for themselves, right? They want to keep as much of the customer assets as they can, and I'm trying to prevent that. So I'm in court, and unfortunately, Qenta won. The judge, first they remanded it, they took it out of state court into federal court. So now I have to hire more lawyers, spend more money, and do the whole thing over in federal court. And the federal court initially upheld the state court's TRO. But then, because they claimed I had no standing, and I think I had a good argument for standing, but apparently the judge didn't buy it. The judge said, where's the receiver? Why isn't the receiver here? See, Qenta leveraged the lack of receiver by saying, hey, the receiver agrees with us. The receiver thinks we should keep the assets. Only Schiff wants us to send them back, right? And so I lost. But the receiver didn't just want Qenta to keep the assets. The receiver wrote Qenta twice and said, no, you need to send the assets back to the customers. That's the reason I don't want them back. I want you to give them back to the customers. But of course, Qenta's not focusing on that. They're just focusing on the fact that the receiver didn't want them back. Now, I wish he would have taken them back because it would have made my job a lot easier, and it would have made it a lot easier for the customers. But But now, okay, so now what I decided to do was contact the customers through email and say, look, here's the predicament we're in. The receiver says that these assets are no longer part of the bank's estate that he's administering. In fact, the receiver sent emails to all these customers and said, hey, those assets are not part of what I'm administering. You got to go get them back from Qenta. And you need to seek out a lawyer. If Qenta's not giving you your assets, get a lawyer, right? So Qenta told the receiver told the customers, go get your assets from Qenta. And the receiver told Qenta, those assets belong to the customers, make sure they get them back, right? Meanwhile, Qenta now sends out letters, emails to all the customers, trying to deceive them into agreeing to surrender probably half or more of their assets to Qenta by saying, hey, we understand that, you have these claims against the bank. They don't have a claim against the bank. They have a claim against Qenta. And they're saying, we've got a solution for you. We have a third party, an unidentified third party that wants to buy your claim, right? At obviously some huge discount, because Qenta has already told the court that they believe they are entitled to keep all of the appreciation on the customer's gold and silver and mutual funds for themselves, that the customers are not entitled to it, that they get it. Under what legal theory they can concoct that BS, right? They got the assets for free and they didn't get them. They got them to hold for somebody else. So they have no legal basis for this nonsense. But this is what they're trying to do. But they're telling these customers, hey, we've got this third party. We can't tell you who it is. And they'll help you get your money faster, right? You don't have to wait. It's been tied up for 3 years. Yeah, they can get their money right now if Qenta would send it to them. They can get their gold right now if Qenta would send it to them. See, Qenta can't refuse to send the gold to the bank, yet then also refuse to send it to the customers. Because what's the alternative? They keep it, right? And they have to do one or the other. But they're sending out these letters. And obviously the terms are so ridiculous that they won't even disclose them publicly. So in order to find out the rotten deal that this so-called third party is going to make to buy your assets, you got to sign this NDA. And I've seen the NDA, and it's the strictest NDA I've ever seen. Like if you even breathe a word of this, your life is over. In fact, you're not even allowed to disclose it with a court order. You have to send the court order to them and give them a chance to go to court and prevent anybody from seeing this rotten deal. But the whole letter, I think, is deceptive. They are strong-arming people, leveraging, stoking fears like, hey, you're never going to get your money. It's going to be tied up forever. But we have a solution where you can at least get some of your money. No, the customers are entitled to all of their money, all of their assets, all of their gold, all of their silver, all of the appreciation. Qenta is entitled to none of it, right? So they are trying to basically convert customers' property into their own, right? I tried to stop them through the bank, couldn't do that. So what I did is I'm organizing the customers to file either a class action or a group lawsuit. I've already got 151 or 2 customers on board. They've already sent letters, emails to Qenta demanding that they send back their money. Qenta's holding 19 million of their cash. It admitted to that. It admitted to holding it. And demanding that they transfer their gold to Schiff Gold, right? And I sent a email to Qenta saying, hey, on behalf of Schiff Gold, we are ready to accept this gold that your customers want transferred here. So reach out. We will give you delivery instructions. We will work with you to accept delivery of the customer's gold. We're going to onboard all these customers, something Qenta never did. We're going to open up accounts and we're going to take over the custodial relationships. Now, one thing I was able to do is Qenta moved the gold. We had the gold in Singapore. Now, before that, we had all the gold and silver in Australia in the Perth Mint. We had to move it because the Perth Mint, had some bad publicity, and then we had bad publicity. And so the Perth Mint was like, we can't do these omnibus accounts anymore. So we moved all the gold and silver from Australia to Singapore. A company called Silver Bullion in Singapore. Now, when we transferred that account to Qenta, right, from the bank, Qenta took that gold and had it shipped to Switzerland. right? I'm not really sure what's happened. I've heard on good theory that they actually sold it, and they never were supposed to do that, and they converted it to paper gold. So they really have to convert it back. Now they have like derivatives and futures contracts. They need to convert it back to actual bars, which they can do that just as easily as they went the other way, right? But that's what they have to do because we sent the bars. The receiver told them, you need to return the assets in the form in which they were originally received. So if you got gold, you got to give them back gold, right? And if you're going to sell, well, you got to give them today's price, right? But you can only sell if the customers want you to sell. You just can't sell on your own because you don't own the assets. All you had was custody. Now, if the customers want you to keep holding your assets, fine. But Qenta doesn't want to. They want to get rid of the assets. They just want to keep tens of millions for themselves. That's the problem. But the silver never moved. They left the silver at silver bullion. So I contacted silver bullion. I showed them the termination where Qenta terminated the purchase. And I'm the one that signed the order to transfer the silver and the gold to Qenta. So the guys at silver bullion were smart enough to realize, yes, the assets should go back to the bank, right? Unfortunately, the federal judge didn't realize that because he's a federal judge. So he doesn't know as much about the law as the guys in Singapore running a silver bullion. So they put the gold back to the bank, which is where it's always been. Now it's under the control of the receiver. So I still can't get at it because the receiver has it. But I talked to silver bullion, and as long as the receiver authorizes it, customers' gold can be moved from the bank's account where they have no access to it to the accounts that I'm setting up for Schiff Gold. We are setting up an omnibus account at silver bullion so that it's very simple for silver bullion to take the gold from the bank's account where nobody can get at it to a Schiff Gold account where every single customer can have their silver right away, right? They can either leave it with us and we'll keep storing it in their account, or they can sell it right now for the current market value, $38 an ounce, not what it was worth 3 years ago, which was half the price. They can have all their money on that gold. Now, the receiver had initially told my lawyer that if I got the silver back, he would work with me. So hopefully he follows through. Now, I'm the one that got it back, right? The receiver didn't do this. I reached out on my own to secure the silver. I tried to get him to help me secure the gold and the mutual funds, and I couldn't get his help. And because I couldn't get his help, I couldn't get that stuff back. But the only way to get that back is the customer sue, because the customers have standing. There's no way any judge is going to say that the people who own the gold and the silver and the cash don't have standing to sue Qenta to get their own property back. And here, Qenta won't be able to lie and pretend the receiver is on their side, right? The receiver wasn't on my side to get the assets back, unfortunately, but he's always been on the side that the assets belong to the customers, and Qenta has to do what the customers want. So the customers want their money back. The customers want their mutual funds sold and their money sent to them. And the customers want their gold transferred in kind as is to Schiff Gold, right? So 150 customers have already emailed Qenta those instructions. And all Qenta has done so far is ignore them and send out another offer where, hey, we got this great deal because of the obstructions of the receiver. Your money's tied up. Bullshit, bullshit, bullshit. Like the only way you can get your money is to sign this NDA and agree to let us keep half of it. Of course, they don't put it in those terms. But if they were being honest, well, that's what they would do. But of course, obviously, honesty has got nothing to do with what Qenta is trying to pull off. So this is my life now, trying to do all this. I'm paying for it, right? I know I got all these customers. Nobody who has an account at the bank lives in America, right? And you got all these customers all around the world. So I'm taking charge. I'm not a plaintiff in this lawsuit like I was in the other one. The customers are the plaintiffs. I'm just the guy paying for it all. I found the lawyer to take the case, right? And I'm paying the bills, even though I got nothing, personally to gain money-wise, because I don't have any money with Qenta, right? So all the money that I win goes back to the customers. Now, I guess if we can get an award, attorney's clause, okay, if I get attorney's fees or something, maybe I can get it back. There is an indemnification clause in the agreement that I signed, so I might have to go back to arbitration in New York. And if I spend $1 million, maybe I can try to get it back from Qenta, assuming they even have the million or it's still in business. Who the hell knows? But this is what's going on. So if you are a customer of Euro Pacific Bank, and you are one of these opt-in customers and your assets went to Qenta, you got to email me. Look at your inbox. I've been saying these emails. You can email me I've been doing all this through Schiff Radio to keep it, because I never really get emails there. So I'm trying to consolidate everything. Peter@schiffradio.com, right? So don't email me there if you're not a customer. But if you're a customer and you own any gold, especially if you own silver, because I can get your silver back hopefully right away, right? But if you own silver, if you own gold, if you have any cash at Qenta, you need to email me. Let me know, because you need to email Qenta a demand. You got to demand, I want my money back. I want my gold back. And if you don't give it to me, I reserve my legal rights to pursue these claims in court, because that's exactly what we're going to do. The demand letters that are going out to Qenta form the basis of the lawsuit. The customers are asking for their money back, and Qenta is refusing to give it. Instead, they're trying to hold the money hostage and negotiate a deal where the owners, in order to get some of their money, surrender their rights to the rest of it. And that is complete BS. They have no right to do this. I did not sell them the rights to custody my customers so that they can rip them off, so that they can unjustly enrich themselves at the expense of customers. So this whole thing has been a nightmare from the beginning to end, from getting screwed over by the IRS and the ATO in Australia and the UK and OSIF. Now to make it all, to really, stick the knife in, now we're getting screwed over by Qenta. And it's the customers too. The customers got screwed over by all these governments, and now they're getting screwed over by a private company. See, not all the bad things happen because of government. There's a lot of bad people in government, but unfortunately, there's also bad people in the private sector as well. I mean, the one good thing about this is, when I was suing Qenta in arbitration, it was all kind of quiet. It was confidential, and it was a breach of contract lawsuit by me, right? No big deal. If they lost, they were just required to give the assets back to the bank. But now you've got hundreds, it's going to be hundreds, of irate customers suing Qenta to get their money back, right? They're supposedly in the business, financial services, where they custody customer money. It's obviously not a good look when all these customers are publicly suing them in federal court, right? This is not arbitration. It's going to be a federal lawsuit in Delaware, which is where they're incorporated. So this is going to be all public, right? All the dirty laundry is going to get aired, right out there in public instead of, quietly. I mean, but it's a lot of work now, because I got to get all these people organized. I got all these people. But I got to do it because I can't sit back and allow it to happen. I mean, I have some responsibility for my customers, even though I'm not the one screwing them over. They sent their money to my bank. A lot of these guys are Peter Schiff fans. Some of these guys are telling me they had their life savings in my bank. Some of them had their life savings in gold and silver at my bank. So what am I supposed to do? Sit back because the receiver won't do anything and just let Qenta do what they want? No, I can't. I couldn't live with myself. So unfortunately, I got to spend the money. I got to do all this extra work at a time where I'm already busy. So I'm working night and day, round the clock, weekends, on this thing. So this, the bank has been a disaster. The worst thing I've done pretty much is start a bank, right? I mean, I wish I could go back in time. Unfortunately, my partner died of a heart attack. So it's even worse for him. Maybe he'd still be alive, but he's the one that got me into it, right? If it wasn't for him, I never would have had this bank. Because it was his idea. I just went along with it. Of course, my wife is always saying, I told you so. Apparently, she said she told me to not have the bank. I don't necessarily remember that. Maybe she did, maybe she didn't. But anyway, that's what's been going on. But that's the end of today's podcast. I've already been going for an hour. But look, if you're a customer, join in on this suit. Don't let Qenta get away with this. That even bothers me more, I think. It's like, what's worse? My customers losing a bunch of money or Qenta, walking away with this windfall, tens of millions of dollars, multiples of tens of millions, right? That might even bother me more. It's hard to say, but they both really, really bother me. And so now I got to spend a ton of money to prevent both of these injustices from happening. Meanwhile, if you like the podcast, don't forget, give it a like, give it a thumbs up. Follow me on YouTube. If you're not a YouTube subscriber, I'm still trying to get to 600,000. It seems like it's almost an impossible summit to attain, but I got to do it. So spread the word, tell your friends about it, and follow me on X. And again, get yourself some gold, get yourself some silver. Go to schiffgold.com, try out the new website, contact the brokers at Europac.com, learn about our funds. Do it now, I think, before the markets move even further in our direction. Bye for now.